Good morning. I'm Scott Olson, reporter for the Indianapolis Business Journal. I'm here today with John Augustine, Chief Investment Strategist at Fifth Third Private Bank. John will be speaking on the financial markets and the economy to kick off today's IBJ Business Growth Strategies Conference. So John, I know the question on everybody's mind is, when will the recession end? Do you have any predictions?
Well, our best prediction would be late this year, early into next year. And what that's really predicated on is we're starting to see a little bit better news on the economy now, or we should say less bad news. If that can stick through the summer, then we can see a little bit more momentum in the fall. Perhaps we see an end to this by the end of the year. And remember, what the folks that scorecard recessions are really honing in on is that unemployment rate, getting that to stop, getting the employment levels to stabilize. That's when they'll really call the end of this recession.
Great. Well, with the federal stimulus money, how much will that help in terms of seeing a recovery?
Oh, it will help. Now, it'll come out in phases, though, and it's a little slower up front, which will be frustrating to a lot of folks. The way that's coming out is, first, we see it in a lot of payroll tax cuts and some unemployment benefit extensions. So we see it coming out to consumers first. Second, it'll come out to states. There will be payments to states to help them with their budget gaps. Third, it'll come out through infrastructure projects. So we'll see probably a lot of orange barrels before long, later this year into next year. So as it comes out in waves, it'll actually accelerate. It's just starting now.
Okay. And in terms of a recovery in the housing market, anything on the horizon there?
Well, from a national perspective, some of the hardest hit areas are actually beginning to see some buyers again. There's actually some buyers materializing in California and Nevada and parts of Florida now. So with that in mind, what we're seeing is prices are still going down nationally, and that's to attract buyers. There's still about economists will tell you there's still about 2 million too many homes on the market. So they're working that off slowly, it seems like. Price continues to come down to help work that off. Mortgage rates are now in the 4s again, which is very good news. Hence, we're starting to see a little bit of stabilization in the hardest hit areas. Again, maybe later this year we see some stabilization in price.
Okay. And in terms of the unemployment rate, I know earlier this month it hit 8.5%. Do you see it going higher, or when do you think it might recede?
Yeah, unfortunately it will likely go higher. The big question is, will it cross 10%? We haven't crossed 10% since the early 1980s. And so in our view, what we have almost this year is a race developing. Will the stimulus start to stick to the real economy before the unemployment rate gets out of hand? That's the race. Now, at this point in time, we're going to say the stimulus does start to stick to the real economy. Unemployment rate stabilizes. Maybe it hits that 10% rate. Hopefully, it'll somewhere stabilize in the 9% range. But unfortunately, when we recover from recessions, and remember, this is kind of the grand recession going on right now, that labor markets are the last to come back. So we do need to keep that in mind, unfortunately.
Yeah. Okay. And lastly, as an investment strategist, what advice do you have for investors right now?
We're coming off of an 80-year extreme in these financial markets. We haven't seen markets like this in 80 years. As hard as it is to do, investors with long-term time horizons, and what we're talking about here is more than 10 years, those folks should maybe consider accelerating their investment plans. If I'm 1 to 10 years where I'm going to use these dollars, perhaps I begin to become a little bit more conservative there. So we're seeing a break in the two groups. We're trying to handle those each in their own way for their own needs. But perhaps the hardest thing to do, if I got long-term goals and I'm coming off of an 80-year low in markets, I want to be a buyer. I want to be an incremental buyer, not all in at once. Do it over time. 401k plans are great ways to do that, but that's really what you have to do in an environment like this.
Okay. Well, great. Thanks for your time today, John.
Great. Thanks so much, Scott.